The French president and the UK prime minister both set to visit Washington next week after the US sidelined Europe and Kyiv in talks with Russia to end the war in Ukraine. Chinese e-commerce giant Alibaba soars after reporting better than expected gains in e-commerce and cloud services buoyed by AI-related demand. Plus, will undecided voters in Germany dent the lead of conservative Friedrich Merz? We'll have full coverage and analysis of this week's election. Well, let's take a look at the European markets map. Again, a lot of the focus will be on the German polls, of course, ahead of the election. There's a lot to be said that the more number, actually, of parties in parliament, the more difficult it would rather be forming a grand coalition. This is something that Germany needs to go forward. Asian stocks led some of the gains earlier on, and it's filtering through to Europe. You can see the CAC 40 gained 0.2%. The DAX and actually the FTSE pretty much unchanged. Look, there's a lot going on, not only in terms of data. Euro area February services PMI falling to 50.7. It's still above 50, which means expansion, but it's less than expected. And then manufacturing PMI rising to 47.3. Now, a couple of things we need to really watch out for is what we heard, the latest Mar-a-Lago Accord. Unclear exactly what this means, but Jim Bianco has certainly been talking about that, and it's moving yields across the board. U.S. 10-year yield 4.4818. Well, it's not moving, but there are question marks about what this means if actually President Trump forces some holders to change their positioning. Euro dollar 104.78, and then Brent crude 75.98. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in just over a week, there's been a dramatic shift in U.S. policy towards Ukraine. The U.S. has held talks with Russia, with both Kyiv and Europe sidelined, and President Trump turned on Volodymyr Zelenskiy, calling the Ukrainian president a dictator. Next week, the leaders of France and the UK will visit Washington. Now, more recently, Zelenskiy has said that Ukraine is ready for a security agreement with the U.S. after a meeting with Special Envoy Keith Kellog. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director, Roz Matheson. Roz, it's been quite a week. It's been a big week since the U.S. seems to be now siding with Russia. What's Europe's strategy getting onto the weekend?
Well, as you say, it's been a pretty extraordinary week with a lot of change and starkly so in terms of these relationships, and the question being where it all goes from here. But as you said, it's also a big question for Europe. We have the leaders of France. We also have the UK Prime Minister Keir Starmer going to DC in a matter of days to talk to the US officials about their position for Europe. We're seeing a lot of conversation around Europe needing to increase its defence spending and do it quickly. A lot of promises around that regard. Yes, we need to look at our defence spending. Not a lot of tangibles so far about how exactly they're going to do that. You know, do they need to look at joint issuance of debt, for example? Do they need to cut spending in other areas of their domestic economies to do so? And so really what you need is European leaders who are going to the US next week to come with some kind of plan and a suggestion for how Europe can really show Donald Trump they're serious about taking more responsibility for their own security going forward. And they're also willing to bear some of the costs going forward on Ukraine, or more of the cost potentially than they're already been bearing. And so what does that look like in an environment where there is a ceasefire in Ukraine? What is Europe's role in that, potentially in some kind of military way, as well as the reassurance force? What are they going to spend in terms of money? And so really it's going to be about showing Donald Trump that they're serious and therefore that they need to be part of the conversation, because as you pointed out, right now Europe seems to be a little bit on the sidelines, and these conversations are going on very directly, particularly between the US and Russia.
Roz, can they convince Trump, or do they go at it alone? What's the strategy?
Well, there is a conversation around that. If they can't convince Donald Trump, do they need to go it alone? But even what we understand about this proposal for a reassurance force of European troops, that still requires the US military to support it and to be involved. There's just no way getting around the US having to be a part of this in some fashion, given the extent of the NATO umbrella that's been there for decades and how important that is collectively for Europe. So it's very hard to say, well, Europe can do it all on its own at this point in time. It just doesn't have the capacity militarily, fiscally, equally. It doesn't have it as well. And you've got the domestic mood in some of these countries in Europe. You can see in Eastern Europe, some leaders saying, we're not going to send troops into Ukraine. We can't do that. You've got an election, just days away in Germany, a change in leadership potentially coming there. And in a lot of these countries, the environment is, we support Ukraine, obviously, but we're just concerned about continuing to send vast amounts of money there, given the state of our own economy. So there's a lot of complexities there for Europe and, not necessarily a whole lot of unity in approach. And so it's an open question, really, can Europe do it by itself?
Roz, over in the Middle East, of course, Israel says a body returned as part of a ceasefire agreement with Hamas was not that of a mother taken hostage with her 2 sons in October 2023. Now, yesterday's exchange happened as negotiations for the second stage of the ceasefire are due to start. So what do we know about what's happened and what's, again, the way forward, Roz?
Well, that is the question. You can see the extent of the upset in Israel today. These claims that the hostage that was returned was not who they thought it was going to be. And obviously, how does that lead into the further conversations? Because we're getting into the next stage of that conversation around a ceasefire in Gaza. And what does it look like in Gaza after a war? And those are even more fraught conversations than the ones we've been having. It does seem that those conversations are still due to go ahead in the coming days, but these things are very delicate. They've been very delicate throughout. And so there's a fundamental question now about whether, and what is Israel's role in this going forward. So, we need to look and see how those talks eventuate in the next couple of days.
Roz, thank you so much. Bloomberg's EMEA News Director, Roz Matheson. Now, the U.S. Treasury Secretary says that bringing down energy costs and deregulation would come before any move to term out U.S. debt. In a wide-ranging interview, Scott Bessent told Bloomberg that this administration's policy will bring down inflation.
Everything that President Trump's administration is doing will be disinflationary. We're going to bring down energy costs. We're going to bring down regulation. What DOGE is doing in terms of cost cutting. And I think once the Tax Cuts and Job Act is made permanent, then we can have a revenue increase, cost decrease. And as you said, as the nation's top bond salesman, I got a pretty good story.
Let's bring in Kallum Pickering, Chief Economist at Peel Hunt. Kallum, as always, thank you so much for joining us. I mean, something that's really getting a lot of readership on the terminal is also this chatter about this Mar-a-Lago Accord. Now, we don't have confirmation, and frankly, it sounds very radical to warrant a second thought, but it's the idea that Donald Trump could force foreign creditors to swap their treasuries into ultra-long-term bonds to ease the country's debt burden. Again, we don't know if it's true. There's chatter. It's picking up attention. Is nothing off the table?
Nothing's off the table. I think that the perspective I would take is, how do we define Donald Trump in this second term? It's so short already.
Yeah.
In almost all respects, he looks a lot like a CEO running a business. He likes deregulation. OK, that helps the bottom line. He wants tax cuts. That helps the bottom line. He mistakes trade balances for profit and loss on a corporate statement. He sees that the US has an unsustainable deficit. OK, it's time to do a debt restructuring. So I think that you get some insight into what he might do if you think about it purely from a business sense rather than a purely political, typical presidential sense.
Because we've never seen this before. Could it break parts of the markets in trying to get a deal done, for example, in treasuries?
I think the worry that I have about the US economy is it's had a very strong cyclical upswing driven very narrowly by US government issuing big amounts of debt, pumping up the domestic economy, which pumps up the market. US consumers look at their 401k, they see the Nasdaq through the roof, they say, well, I don't need to save much, I spend every dollar I earn. The rest of the economy looks as weak as it does in Europe. If that starts to come unstuck, the US has some problems. Since the start of the year, all the data have actually turned down. And if suddenly there's uncertainty in the Treasury market, that means investors say, well, I actually demand an extra 50 basis points on a 10-year or 15-year. And then that suddenly hits discount rates in markets and consumers pull back. Very quickly, this comes unstuck. So I think it's a very high-wire act that he's trying to play.
But, Kallum, I mean, you're one of the ones that actually thinks that the world could be underestimating the risk of a U.S. recession, where a lot of the chatter is U.S. exceptionalism. So what are you looking at?
Well, almost always it's the case that sentiment is offside relative to fundamentals. In the end, that's what gives us our bulls and bear market. We like that in markets. In the US, it strikes me that sentiment is just way too high. It's going to be very difficult for the Fed to give the market a kicker if the US economy slows, because inflation is just too high. You have this narrow leadership in markets. You have this consumer-driven economy, which is, as far as I can tell, almost entirely underpinned by US fiscal policy. And what we're trying to do now is understand US fiscal policy. And we are hoping that DOGE, deregulation, perhaps now debt restructuring, basically pulls off this fiscal experiment. I would just make a point here to say the Fed thinks US potential growth is 1.9%. US has been growing at 3% almost annualized for 2.5 years. If I strip away the government expenditure component, US growth is basically where the Fed thinks. Economies don't go from 3% to 2% nicely. That's not the way the world is. They're cyclical. And so if the US starts to lose momentum and people anticipate that it gets worse, that's how that cyclical dynamic unfolds. And if I look at the Atlanta Fed's GDP now estimate for Q1, it's halved from 4% to almost 2% in the last 2 weeks. That's not a good sign.
No, it's not. And we also have to talk about inflation. We stay with Kallum, Pickering, chief economist at Peel Hunt. Now, coming up, we also are 2 days out from what could be one of Germany's most consequential votes in decades. So we're live in Berlin with the very latest. That's next. And this is Bloomberg. 8 weeks after the Bundestag was dissolved, Germans finally vote this weekend following an election campaign which has failed to turn around the fortunes of the Chancellor Olaf Scholz. Well, Bloomberg's Oliver Crook is outside the Chancellery in Berlin for us. Ollie, so set us up for what to expect as Europe's biggest economy heads to the polls on Sunday.
Yeah, that's right, Francine. I mean, for a snap election, it hasn't felt very snappy, right? We've been talking about this election for months and months and months. And really, it's been since November the 5th, the same day that Donald Trump was elected president of the United States, is the day that Olaf Scholz, the Chancellor of Germany, pulled the plug on his three-way fractious coalition and basically paved the way for this election, which will get underway now on Sunday. One of the remarkable features of this election campaign, despite its length and despite for how long it's been going, is that really the polls have not changed a whole lot. From the very beginning, the CDU, Merkel's traditional party, now led by Friedrich Merz, has been at the #1 spot with 30% of the vote. And the other sort of interesting feature of this election campaign, Francine, as we've been reporting on for the last few months, is the prominent role that the AfD, the Alternative for Deutschland, the far-right party of Germany, is playing, coming in at 20%, the second biggest party in Germany for the first time since the end of the Second World War, and basically the first time that they've ever put on a chancellor candidate. When you look at the sort of historical outcome since the turn of the century in Germany with the leading party and what they have done in terms of the polls to lead a government, we're now expecting Friedrich Merz to get 30%. Olaf Scholz only had 25%, which is part of why he had to get into this very sort of uncomfortable coalition. What they are hoping for from the CDU is to break through with a much larger majority to begin actually really the hard work of this election, which will be the coalition forming after that Sunday vote.
But, Ollie, I mean, this is a problem, right? The main danger is that the vote yields another fragmented parliament, which could leave a power vacuum really at the heart of Europe at one of the most complicated times. How difficult will it be to form a coalition, maybe even a grand coalition?
Yeah, Francine. So listen, this is exactly what you and I are going to be looking at on Sunday night, really most importantly in these sort of polls when we get those exit polls out at 6 p.m. By 7 p.m. on Sunday, we should have a pretty good idea of the composition of this next Bundestag. But Francine, as you know, one of the things that will be most important is not necessarily the parties that get the most votes, but the parties that get the fewest votes. Because if any party gets beneath 5% of the vote, they basically get booted out of the Bundestag, which basically redoes all of the arithmetic in terms of the parliamentary parties and coalitions that are possible. I think the base case right now in terms of probabilities is that grand coalition, a CDU, SPD coalition. That is something that we've seen very, very frequently in German history. It is something that we've seen with Merkel and Scholz. Scholz was finance minister, of course. But what we are expecting is that if the SPD does as poorly as they're anticipated, this is going to be their worst outcome since the end of the Second World War, really in the history of the party. That will mean that Olaf Scholz will probably go, which will make it easier to make that coalition. coalition. But the real question is, Francine, as you say, if those votes get dispersed across the political spectrum, you don't really have a strong showing. You could have yet another three-way coalition, or maybe even something more complicated than that. And that is really what I think the markets and what the German population, I mean, regardless of what you think, what Germany needs now is a sort of decisive leadership in this moment, particularly as it stares down the possibility of tariffs from the United States, which will basically guarantee a third consecutive year of contraction for the German economy.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, from Germany. And we'll have full coverage with a special Sunday show as well. Let's bring back Kallum Pickering, chief economist at Peel Hunt. Kallum, I mean, the concern is that actually it's going to be fractured. It's going to be messy. It'll take weeks, if not months, to form a government. And that means reforms get pushed back.
That's right. I mean, look, of course, I sound a lot like a Brit here with our oppositional politics. But, you know, in America and on the continent, we're all demanding consensus. No. Politics is fragmentation by definition. So this is kind of normal in that sense. But the challenge is, of course, is what happens with the budget. How does Germany, which remains the most important economy in Europe, it's the anchor for the EU, how does it then deliberate the geopolitics and deal with this US issue? My hunch is we'll probably get there in the haphazard way with these coalitions. They'll come up with the deals on the stuff that really, really matters. That is military spending, it's what do we do with the EU budgets, all the relevant stuff. But what Germany actually needs is supply-side reform to make it more competitive, probably policies that encourage consumers to do a bit more heavy lifting, to just rebalance the economy. It's much too oriented towards global trade at a time when global trade is weak, and those require reforms. I suspect actually the question we'll be answering or trying to ask ourselves 3-6 months down the line if this doesn't work out is how much further can the ECB go, because we're hoping here we get a demand side effect from the German election. If it doesn't come, then it's to the ECB to go a little bit further.
But Cam, there's also so much talk about, you know, the need for joint debt issuance to deal with defense. So it just puts Europe in a very sticky spot if Germany is not strong.
That's it. That's exactly where you need the consensus and where you need that anchor. But in the end, Europe now doesn't have a choice. Right? It's going to have to increase its military spending as a percent of GDP. And the challenge there for markets is, let's suppose, under whatever circumstances, there's an end to the conflict in Russia-Ukraine. Typically what you would expect to see is bond yields come down, we take some inflation risk off the table, but actually what you would say is, okay, maybe the near-term inflation risks are down, but if you have more debt issuance across Europe to pay for military spending, it's going to be very difficult to cut welfare spending in these circumstances. That is probably going to push bond yields up. And so net-net, what you're looking at is a change in market leadership rather than, okay, we can be optimistic about the world.
Talking about optimism, I mean, the UK was also, I mean, we had an inflation print, which wasn't great, actually, which complicates matters for the BOE this week.
Oh, so the inflation print needs to be understood, I think, in the context of what we've seen across economic data for the past 4 weeks, which is consistent surprises to the upside. Now, that might be just expectations that just come so low, it stands to reason. You're too pessimistic, eventually you get an upside surprise. But I think from the Bank of England's perspective, what you would ask is, as we think about the rising employer tax in April, do firms have pricing power or not? In other words, can they push that tax onto final prices and therefore we don't have an unemployment problem? Or without the pricing power, do they lay some workers off? In the end, I think you prefer pricing power, low unemployment, because it means demand is strong as opposed to unemployment. And so my call for the Bank of England is we get 2 cuts. They won't go much further than that, and the economy will actually be a bit stronger than expected over this year.
Okay, interesting. Callum, as always, thank you so much for joining us.
My pleasure, thank you.
Chief Economist at Peel Hunt. Now, coming up, day 2 of the G20 foreign ministers meeting in South Africa after the U.S. snubbed the event. We'll have plenty more from the region next. This is Bloomberg. It's day 2 at the G20 foreign ministers meeting in South Africa after the U.S. snubbed the event. This comes after South Africa's President Cyril Ramaphosa said it will iron out wrinkles in its relationship with the U.S. Let's go straight to Bloomberg's Jennifer Zabazaja, who's in Soweto. So, Jen, what can we expect from the second day of the G20?
Yeah, Fran, I mean, a lot of what we saw on the first day was really sort of a doubling down of this relationship between the G20 members. We heard President Ramaphosa trying to at least not let a lot of the noise that we've been hearing between South Africa and the U.S. overshadow his agenda, which is really focused on not only amplifying the global South and African voices, but also promoting multilateralism and also really encouraging reforms of global institutions. That is something that he has pressed on about since he took over this G20 presidency. And so the expectation is that throughout today, we will continue to see more of these bilaterals happening. We did see Russia's foreign minister meeting with his Chinese counterpart, as well as South Africa and Brazil, Turkey and Russia as well. So a number of these members are meeting together to, as they say, address a lot of the geopolitical issues and see where they can find consensus. But there is no naivety here. Right? There is the elephant in the room is that the U.S. Secretary of State Marco Rubio is not here next week. We will not see Scott Bessent at the finance ministers meeting. And so these members are trying to at least continue to strengthen the relationships that they do have and perhaps restart new ones like South Africa and the EU. But we spoke with the EU and they said, although they do see this moving forward, they do notice that there is this recognizable gap without the U.S., not just financially, but also geopolitically.
Jen, as always, terrific briefing. Jennifer Zabazaja there at the G20. Coming up, we'll get the take of a former German ambassador on what Sunday's election will mean for Europe. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Chinese e-commerce giant Alibaba soars after reporting better than expected gains in e-commerce and cloud services, buoyed by AI-related demand. The French president and UK prime minister are both set to visit Washington next week after the US sidelined Europe and Kyiv in talks with Russia to end the war in Ukraine. Plus, will undecided voters in Germany dent the lead of conservative Friedrich Merz? We'll have full coverage and analysis of this weekend's election. So on Sunday, Germany will go to the polls to elect a new chancellor. With Ukraine and European security high on the agenda, the results will, of course, have wide-reaching impacts across the continent. We can now speak to the president of the Munich Security Conference Foundation Council, Wolfgang Ischinger, who's also a former German ambassador to both the UK and the US. Ambassador Ischinger, thank you so much for joining us. When you look at the new world order that seems to have been laid out at the Munich Security Conference, how important is this for voters when they go to the polls on Sunday in Germany?
Well, let me make 2 points. First, of course, you are absolutely right that what happened in Munich is what we call in German, an obvious sign of the Zeitenwende, of the massive change in international relationships, beginning change, apparently, of the relationship between the United States and Russia, etc. So important things are happening. That's obvious. Second point is, in the German election campaign, these questions, if you ask me, should have had a priority place, but they didn't. The German election campaign focused on 2 other issues, which are admittedly for the German citizen very important. One is migration, and the other one is the flagging German economy. But I regret, as a foreign policy person, as a former diplomat, as the president of the Munich Security Conference Foundation, I regret the fact that we have not spent more time in this election campaign thinking and debating about what Europe, what Germany in particular, should do, must do now in order to defend European interests and make sure that our interests, for example, with respect to Ukraine, are not going to be ignored by Russia, the United States, and possibly others.
Yeah. But, Professor, what does Europe need to now do most urgently? There's a number of reports that a number of presidents or heads of state will travel to Washington. Does Europe need to go at it alone, or do they need to negotiate with Donald Trump?
Well, of course, we will need to negotiate with Donald Trump. We are members of one and the same alliance. let's not forget that there is still NATO, and NATO is the framework in which we've been working together for practically three generations. But it's also true that Europe, as such, has not been able to come up with a clear plan supported by appropriate capabilities. That's the European problem, and this is why I support those. I advocate for a more credible European Union in the area of foreign policy, security, and defense. We need to get our act together. We need to speak with one voice in these matters, and we need to spend more. That's also quite obvious. So in other words, we have a very full plate in front of us, and the next German chancellor, who will be elected this weekend, will need to respond to these international concerns, in addition to the domestic concerns which I just mentioned, migration and the economy.
Ambassador, will Friedrich Merz, who looks like Germany's next chancellor, be able to lead Europe and Germany out of the mess it's in?
Well, what I know Friedrich Merz quite well. In fact, I have to admit, for transparency reasons, that my wife has actually written a biography of Friedrich Merz. So at our kitchen table, we've been talking a lot about him. I know that he is a very, very committed European. He served in the European Parliament before he became a leader in the German setup. And I know that he is totally aware that if there is no adequate Franco-German, Polish, etc. leadership in the European Union, no leadership will be possible. I think he knows that, he accepts it, and I have very positive expectations that he will meet these expectations as soon as he is actually elected, which unfortunately, under our German system with coalition treaties needing to be worked out, which actually may take several weeks, it may last until way into the month of March, maybe until the end of March.
But Ambassador, is this your biggest concern, that if it takes a very long time to build a coalition, it'll be very difficult and very painful to push also through some of the reforms that the German economy so badly needs? Forget even what Europe needs on defense.
I'll be the first to admit that these German elections are not coming at the best moment. Absolutely. It would have been much better if we had an election before Donald Trump started his rather fundamental policy changes on a number of issues, the EU-US relationship in terms of tariffs and trade, the Ukraine issue, and a number of others. But this is the way it is now, and it is a bit unfortunate that we are not going to be doing, from the German side, what Emmanuel Macron is now trying to do by going to Washington next Monday, talking to President Trump. It would be great if an elected German chancellor could join him and could, chime in and present a united European leadership view. That will have to wait a couple of more weeks, I'm afraid.
Ambassador, do you still see a chance that Europe or others will be able to convince President Trump off the pro-Russian course that he seems to have chosen, or is it too late?
Well, let's see what will emerge. We don't have negotiations yet. What we're having are statements by this side, by that side, about the future of this, how this will be handled. Once negotiations will really seriously start, I think people will realize that this is going to be a difficult, lengthy, complex issue where we will be facing, we, the West, the United States, and Europe, hopefully together, a very, very demanding Russia, a Russia represented by extremely experienced negotiating folks. I have known Sergei Lavrov, the Russian foreign minister, since 1994, in other words, for 30 years, he is one of the most experienced diplomats that I have had the privilege of meeting in my career. In other words, these are not going to be easy discussions and negotiations. We're dealing with very experienced, very crafty folks on the Russian side. So don't expect quick results anytime soon. And I think the United States government, the Trump administration, will find out that this Russian regime is a very tough nut to crack. That's my view.
Okay, thank you so much, of course, for all of your analysis. The president of the MSC Foundation Council, Wolfgang Ischinger, there. Now, also join us on Sunday. We have a special show from Berlin as polls close in Germany. That's at 5 p.m. London time, 6 p.m. in Berlin. We also had some UK PMI numbers. This was very interesting in the light of what Kallum Pickering was saying. We had an inflation print that was higher than expected over this week. So he's now, for example, saying that the BOE can only do 2 cuts this year. UK February services PMI rising to 51.1, manufacturing falling to 46.4. Coming up, we'll have plenty more from the markets as Air Liquide reports annual results. We'll talk exclusively to the chief executive of the French chemicals company. That's next, and this is Bloomberg. Liquide shares have jumped after the French chemicals company reported higher margin guidance after full-year results were described as in line. Well, the company's chief executive, Francois Jackow, joins us now. Mr. Jackow, thank you so much for joining us. There's a number of challenges out there. What's your outlook for Air Liquide in the next couple of quarters?
Good morning, Francine. Thank you very much for the invitation. As you have just said, I mean, indeed, we have published a record year for Air Liquide in 2024. That was clearly a record in terms of margins and margin improvement. That was also a record in terms of commercial successes with investment decision at a record level of 4.4 billion euro. And also, we have been doing this by reducing our CO2 footprint in absolute value. So, as you can see, clearly, that was a record year where we showed and demonstrated resilience, performance, and preparing the future. So all this is good, and we are looking forward to 2025 in a quite challenging context for sure, but relying on the strengths of Air Liquide.
Mr. Jackow, the European chemicals, of course, autos and steelmaking industries are really suffering for a number of reasons. Add to that extra tariffs and a possible trade war with the U.S. How is Air Liquide preparing for that?
You know, Air Liquide, due to the nature of our business, where we make industrial gases for the manufacturing industry, but also, I mean, for the healthcare sector, we are a very local business. So we basically build a plant and infrastructure in the country where we operate. Our products do not travel across boundaries, across frontiers. So in this world where there's a lot of discussion, talk about tariff, Air Liquide is quite resilient and protected against that. Because when we operate in the US, we are an American company producing locally. When we do the same in Canada, we do the same in Germany. This being said, we have to be, of course, very cautious because there could be indirect impact for our customers who may be affected by the increased tariff globally. And that's true for many companies across the world.
Jackow, in France, the government is also raising taxes on companies to reduce the deficit. How much concretely will that impact Air Liquide?
Again, the model of Air Liquide is very resilient, including regarding the tax, because as we are a local company operating and paying taxes in the different countries where we operate, the impact of the increased tax in France will be limited, probably between 1 and 2% of the net earnings of the group.
Mr. Jackow, has Europe been too ambitious in terms of green ambitions in general, given what's happening at a global level?
Well, I think we have to recognize, the leadership of Europe to tackle very important issues related to global warming and basically the impact of the economy of industry. So I think this is really something where Europe has been showing the way. Now, how Europe has put that in practice, I think that's probably the issue. We have seen a lot of complexity in the way Europe has set the rules, even the support for companies to decarbonize the industry or to decarbonize the transportation. And that's really what is hurting the European company. But I think the intent is very valid. Hopefully, the decarbonization objective is there to stay. And we have to recognize that in Europe, the energy transition is an opportunity to renew the industrial footprint and also to ensure sovereignty through a strong industry in Europe.
Okay, thank you so much. Francois Jackow there, the chief executive of Air Liquide, for joining us this morning. Coming up, Citibank has announced that it is scrapping its diversity goals. This comes in the wake of political and legal pressures under the Trump administration. More on that next, and this is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Alibaba's ADRs jumping in U.S. pre-market trading after the company posted stronger than expected revenue gains in its e-commerce and cloud services division. Now, for more on all of this, our top corporate story of the day, let's bring Bloomberg's Peter Elstrom, who leads our global technology coverage. So, Peter, what has got the market really excited about Alibaba?
Well, it was a pretty extraordinary earnings report. The company, as you said, reported pretty strong earnings. It's a business that has largely been built on the e-commerce operations there, much like in Amazon. But also their cloud computing business was very, very strong. It grew 13%. That helped them grow overall the top line faster than it has in more than a year. But what really got investors excited here and really drove the stock price yesterday is that the executives talked a lot about their AI ambitions. They're tacking hard into artificial intelligence. They've been investing quite a bit of money. The CEO, Eddie Wu, went so far on the conference call to say that artificial general intelligence, or AGI, is now the primary objective of the company, and they're going to invest more in the next 3 years than they have in the past 10 years. And that sent the shares skyrocketing. They went up more than 10% during trading yesterday, added about $25 billion to their market cap. So it sounded a little bit like a conference call with DeepSeek or OpenAI, where they're talking a lot about their AI ambitions and less about the e-commerce business. It's really been the foundation of the business so far.
Peter, what does this mean for the AI sector in general?
Well, it's very much a new competitor, a very aggressive competitor. It's important to remember that the China market is separate from what we're going to see globally. U.S. players are not going to be able to go into that market the way that they would in, say, Europe or someplace like that. So the real competitors are going to be domestic. DeepSeek, of course, got a lot of attention a couple of weeks ago when they came out with this low-cost advanced AI model. But the other real competitors are Baidu, the search company, has done quite well. Tencent, which is the games giant that also has accelerated quite a bit. And now Alibaba has really jumped ahead with a couple of key accomplishments. They came out with an AI model called Gwen, which on most of the benchmarks competes quite well globally. In addition to that, they look like they're going to be the AI partner for Apple on the iPhones in the China market, which is a very big accomplishment for them. They're moving ahead Again, the Chinese government is not going to let some other foreign AI model work on the smartphones within the country. So Alibaba getting to be that partner with Apple is going to be a big accomplishment. But Eddie Wu was very clear. He said, we don't know what AI is going to be used for in the future. The key thing is that we invest now so that we're in the game in the future and we're able to offer those opportunities, whatever they happen to be. He also talked about how AI is now becoming such an important part of the economy that perhaps it could replace or participate in 50% of global GDP at some point in the future. So they have very, very high ambitions and big dreams about how they're going to play a role here.
Peter, thanks so much. As always, Peter Elstrom, of course, in charge of global technology, joining us from Taipei today. Now, let's wrap up some of the news from the banking sector this week. And Standard Chartered has announced that it's boosting its annual bonus pool up 7% from 2023. Citi also announced that it is rolling back on its diversity initiatives. Now, for more on this, Bloomberg's Jennifer Serrain, who leads our UK and Middle East finance coverage, joins us. So, Jenny, I mean, there's a lot going on, frankly, in global business, but certainly there is in banking. Standard Chartered annual bonus pool up 7%. Give us the details.
Yeah, so I think it pretty much mirrors what we saw across Wall Street this quarter. A lot of these banks were able to kind of navigate this volatility. Their trading desks did really well. The fact that interest rates have come down ever so slightly and deal makers feel like they have a little bit more certainty on the regulatory environment with Trump coming in means that M&A is really looking good. So a lot of these banks set aside more to make sure that these traders and deal makers stick around this year to help them kind of further take advantage of all these gains.
Other key takeaways, it seems like CEOs got a lot of pay rises.
Yeah, no, definitely in the UK, I think it was something interesting this quarter. We finally started to see the removal of the bonus cap kind of coming through. And so that was a really big push that the UK made to kind of get itself on better footing in terms of the global financial landscape, breaking with the EU in that way. And so, yes, the Standard Chartered CEOs pay out today and sort of similar with what we saw from Barclays, HSBC and all the rest. Yeah, really giving the CEOs something to work for and boosting their potential bonuses.
Jenny, talk to us about Citi. So this is just the latest bank actually ditching their diversity. Is it diversity goals or just the initiatives?
No, it's the goals. And this is on the heels of the pressure from the Trump administration, who's issued a series of executive orders on this. But there's also been some lawsuits in the U.S. that kind of make it really difficult for companies and especially federal contractors to have very specific diversity targets. So Citi, for many, many years now, has been trying to increase the representation of women at the assistant vice president to managing director level. That's kind of key. If you want to see more women in the CEO role like you have at Citi, you have to kind of start in that middle level and making sure that you're really keeping up there. But yes, with all of the political and kind of regulatory changes in the U.S., you've seen not just Citi, but lots of banks have to abandon these efforts. So I think that we're really only at the start of this, and we're probably going to see a lot more activity like this going forward.
So, Jenny, I mean, we had Goldman Sachs actually say that also they've reached some of their goals. Are most Wall Street banks now openly said that they are abandoning them?
We haven't heard officially from all of them. I think this is something that executive management teams across Wall Street are actually looking at right now. The way that these different legal cases and executive orders were written means that, and the way that the different goals that the banks themselves had, it just means that I think it's going to be a long process of figuring out, okay, I think we're able to keep this. This has to go. I mean, they're also dealing with what their employees have to say about this. And the reason that a lot of these banks originally set this out was they were facing pressure from employees to set these goals. So it's a lot of tight ropes that they have to walk. And I think that's why we're expecting to just hear a lot more from Wall Street on this.
Jenny, thanks so much. As always, Jenny Serrain there, who leads our UK and Middle East finance coverage. Now, another reminder to join us from Sunday, live from Berlin, for a special program on the German elections. That's when polls close at 5 p.m. London time, 6 p.m. in Berlin. This is Bloomberg.